one, but you guys, much reason to be optimistic about the non-agency space moving forward. But really quick, I'm just going to do an announcement that I want to survey the crowd here and see who is not yet a member of the California Association of Mortgage Professionals. Is there anybody in the room that's yet is a member? Okay, we have a few right here, you guys. Here's what I'm going to ask, that we actually get some membership documents so you guys can sign up. And why would you want to be a member of CAMP? Well, there's a lot of reasons. Number one, that shows anybody that is dedicated to their craft here as a mortgage professional, you can have that CAMP logo at the bottom of your signature. Now, as I'm on the microphone right now, there's people in Michigan, there's people in Texas that are doing what? Calling potential California borrowers. Why would somebody in Michigan call a California borrower?
Yeah.
We're the land of milk and honey when it comes to mortgage loan sizes, and I'm looking at a room full of people that are paid on basis points. So if somebody lives in California and they're working with somebody that, hey, are they out of state? I'm a professional in the state of California, right there, that could tip the scale, just alone. The value that CAMP actually provides to you guys, you go to the website and you'll see all the discounts and benefit of CAMP. And again, it just shows to your clientele base that you're true to your craft here as a California mortgage professional. So thank you for that. Okay, let's get into some non-agency lending, shall we? All right, you guys, another survey. Who in this room, besides Scott, has done a bank statement loan before? Okay, so we've got about a third of you out there that has done a bank statement loan. Next survey is, who has done a no-doc investment property loan, DSCR? Okay, about a quarter of the room, okay? The rest of you guys, buckle up. We're gonna show you how to make a lot of money.
How about the last 12 months? Last 12 months, non-QM loan the last 12 months. Look at that. Wow, that's amazing. Shut up, John. Okay, cool.
All right, so with that said, we'll go with John first. John, what do you think is the biggest pain point for somebody getting in and trying to do a non-agency loan, a bank statement, DSCR, delayed financing, we can go to asset depletion?
Yeah, that was a great question. I'll be honest with you. I think the biggest hesitation, people are afraid, right? So in this market, your pipelines are down, and you're hanging on to every loan, and the last thing you want to do is give this one loan that has a shot to somebody or a process you don't trust. That's in my mind the biggest fear, because then what happens? Then that deal blows up. You lose your realtor relationship, you lose your referral source, wherever that deal's coming from. Not only do you lose a loan, but you lose that referral source. So the biggest thing today is just people figuring out how to take that next step into this non-agency space. If you look at the market, and tribute to you, the market has shrunk dramatically, not just in terms of size of loan, but in terms of the number of loan officers. So congratulations for surviving. You're here, you've made it. We've gone from about 300,000 loan officers over the last, kind of 2022, if you will. Closed at least one loan. We're now down to under 200,000 over the last 12 months. It's just a dramatic shift in people moving out of the business. The good news is the ones that are here are the ones that know how to do deals. And so I'm not surprised to see all your hands go up. But we still run into loan officers that you're either managing, or maybe you yourself are just afraid to step into the non-agency space. I spent a couple days in New Orleans at a broker expo, and we had people come up to us. I said, the first question I always ask is, are you doing any non-QM loans? And at least 60% of them said, I basically throw them away because I don't know how. I don't know how to take that next step. And so for us at Newfi, what we're trying to do is educate you in a way that it makes sense to you. The biggest step really is just that income piece. Once you get these loans into the system, brokering a loan is brokering a loan. It's no different than you brokering a conventional loan. The critical piece is making sure you're doing business with somebody that knows how to do it. It's the most critical step. So make sure you have a relationship with someone, a company, hopefully a company that focuses on it, and let them educate you, let them train you on how to take that next step. Because once you get those first couple loans done, you'll realize that this is easy. There's nothing hard about it. And at that point, you can switch from doing non-QM for fallout, I'm gonna save a deal, to doing actually selling non-QM for non-QM's sake. And those are the people that are killing it today. One of our good brokers closed 32 loans last month. Most of them non-agency loans, because that's their focus. So that's, in my mind, that's the biggest pain point.
John, anything you want to add? Any other pain points that you see? What I'm hearing is fear. Folks, jump in, the water's fine.
Fear that's a real thing. And as John was speaking, I was thinking about my sister. She's a loan officer in Oregon. And so about maybe 3 years ago, I started telling her about this new non-QM product. I'm excited. And she's like, no, I'm not going to do it. I said, what are you talking about? I'm your brother. I'm going to make sure your loan gets through the process. It'll be fine. No, I don't broker loans. I said, well, have you ever brokered a loan? No, never brokered a loan. Not going to broker a loan. Won't do it. Used to, she's a new company, it's a mortgage banking company. I do it internally. I'm not going to broker loans. And so I know when I saw about half of the hands go up out there, and when John said he'd done a non-QM in the last 12 months, it's about 50% of the hands were up. I know the other 50% are secretly thinking, not going to broker a loan. You're just like my sister. But I'm here to tell you,
In a bad way.
yeah, I'm here to tell you though, if you broker a loan the one time and you disclose everything, and it's important to make sure that you disclose everything to your account executive. Underwriters are going to find the details. This isn't the subprime days where you hide everything, right? So it's important that you tell everything about the loan and that you communicate well. And in this day and age, as long as you're working with a good non-QM company and a good account executive, you're going to be able to pull the loan through. And so don't be afraid of brokering. That's all I would say.
Great answer, because I've been doing this for 10 years with Angel Oak, and let me tell you, about 7, 8 years ago, it was wonky in this space, you guys. A bank statement loan was not easy, and it was wonky, but that was 8 years ago. Now we have this system down pat, you guys. It is a very easy system to follow. All you do is fully bake a 1003. We can do that, right? Run credit and dump all the bank statements on us lenders. And what we're going to do is we're going to have our underwriters go through these bank statements and determine what the monthly income is for your borrower. It's not complicated. Don't overthink it. Now, you might have heard people, are you trying to do a bank statement loan? Oh my God, you stay away from that, you're going to lose all your referral partners. Guys, no longer is that the case. And here's the beauty behind a bank statement loan. There's not a lot of W-2 wagers out there buying a $2, $3, $4, $5 million house. Folks, I'm here to tell you, they're all 100% self-employed, taking advantage of our 75,000 page U.S. tax code. So they can either get all their deductions or pay the IRS a lot more money than they need to just to qualify for a loan. Folks, there's a huge underserved market out there. So with that said, Todd, where do you see the biggest opportunity in this non-QM, non-agency space?
You just hit it, self-employed people. Those are the people that have been ignored for quite a while. And when rates were super low, most loan officers, they're cherry picking might not be the right word, but you're busy, you have lots of loans, you're trying to put as many loans as you can through, and the taxes alone are this thick on some of those self-employed people. And it's not like calculating income on a W-2, I think we can all do that. Calculating the self-employment income, what do you add back? Some places just don't train their loan officers very well on that. So there's a lot of confusion that would go around about self-employed borrowers. And so I would tell you that the non-QM space caters to self-employed borrowers in a number of different ways. Eric just mentioned bank statement loans. You can use 24 months, you can use 12 months. That's pretty standard. There's different reasons why we would do it different ways. And then there's also the self-employed investors. A lot of those people are with hard money lenders. So I would focus on investors as well, but most of those investors quite often are self-employed. So really dig into that market that's been ignored, and I think you'll find a lot of success.
How many of you biggest referral sources realtors? Okay.
3. Oh, that's impressive.
That's
That needs to go up.
I'm a bit surprised by that. I thought it would be more. How many of you biggest referral source is CPA, attorney? Okay, we have one. We got one.
George.
We have one in the back. So you'll get to know George Duarte back there. So who knows? Look. So today, the biggest thing that you're worried about, that we're worried about, is volume. There's not enough loans in the system, right? So you got to try and figure out a way to create more volume for yourself. And we think that the biggest opportunity in non-QM is figuring out a way to create more volume. You give yourself an opportunity from any of your referral sources. It doesn't matter whether it's a realtor or a CPA, attorney, a divorce attorney, whatever they are, you have an opportunity to sell and pitch yourself in a different way. Because you're competing, I just kind of went through, the universe just got smaller, right? In terms of total loan officers. You have an opportunity to separate yourself. And we think that by being able to sell other products other than just your agency products, that you're going to be able to separate yourself. So if you look at the biggest, almost any non-QM lender, 4 out of 10 loans are bank statement loans. 4 out of 10 right now are DSCR. The rest are fallout, prime jumbo fallout or prime jumbo loans. We're seeing a bit of an increase in our volume recently on our true prime jumbo product. So you're seeing a dislocation in a lot of the smaller regional banks. So people that normally would have gone to a regional bank to get a prime jumbo loan, they're not doing as much of that business anymore because of all the mess that's in the community banking space. So we're seeing our business increase there. But that's really the four pieces. So the question is, how do you get there? All right, so it's, all of us have different niches and nuances to what we do. It's one of the challenges of non-QM, right? So it's trying, like LendSure, Angel Oak, Newfi, we're starting to see some consolidation in that. LTVs are about the same, scores are about the same, but it's in the nuance that makes things different. And that's a challenge. So again, I kind of go back to make sure you have a really good relationship with a wholesale account executive who can help you through this process. Because when you get that loan, the first thing, and it doesn't qualify on an agency product, the first thing you want to do is get in dialogue. Get in dialogue with one of us. Get in dialogue with your local account executive. Somebody that's an expert that can help walk you through that product. Because the opportunities are endless. If we stood up here, we could each do an hour presentation on our own, just on our product. And we chose not to do that because you'd all be asleep by then. What we're really here to do is help you close more loans. It's why we exist. It's the only reason we exist, is to help you make more money and help more people get into houses. That's the only reason. But if you don't call us, we can't help. So don't be that one loan officer that throws that borrower away.
Don't be my sister.
Don't be your sister in a bad way.
So here's
Love her, though.
here's what I think that blocks a lot of people is, geez, the last thing I want to do is get some alpha self-employed guy on the phone who's used to getting his way and bullying people and starting originating a loan with them, and he or she is going to ask me questions that I'm ill prepared to answer. Folks, don't overthink it. Bank at 1003, run the credit, give us the bank statements, and watch how this loan works out. It's really that simplistic.
Can I just add one thing real quick?
Yeah.
Because it's interesting comment. In this market, so you go back, 6, 7, 8 years ago when non-QM started to develop, borrowers had no clue. Brokers were scared to originate it. Borrowers had no idea what we were talking about, what this loan was. Today, your self-employed borrowers might know, if you don't know this space, that borrower might know more than you. They are fully aware, self-employed borrowers that write everything off on their tax returns are fully aware today that they can go get a bank statement And if you're not providing it, they're gonna go find somebody that can. So it's incumbent on you, and I'm just grateful you're here. I wish we had more, but it's incumbent on you to be an expert. Because if you're not, your borrowers are figuring this out. How many of you have had an investor, a real estate investor, come to you and say, can I get a DSCR loan from you? That's happening today. They know what DSCR is. They may not know what it stands for, but they know it's no income investor loan. They get it. So it's income. You have to dive in here.
We're gonna do a Q&A at the end. I saw a hand go up, but we'll get to questions, you guys. Okay, so the next one is, if you were a loan officer, how would you go market right now to this non-agency market? What would you wake up tomorrow and do first?
Well, tell you what, the first thing I would do is I would go after real estate agents. And I don't mean getting them as a borrower, I mean as a referral source. And I think we saw just, 3 or 4 hands go up when we asked that earlier? Not very many. Maybe some of you are doing it and you just put your hands up. But I would tell you, it's all purchase business today. And who else is struggling besides the people in the mortgage industry? Realtors, right, real estate agents. They're struggling every bit as much. And there's a lack of inventory, and there's high interest rates, there's challenges, right? And so I would go out and make sure you educate the real estate agents on what's going on out there, because they need to be able to retain and work with buyers. And so there's a number of programs that we have in the non-QM space. Who knows what asset depletion is? See hands. Now you know that from what, the conforming side or the non-QM side?
Non-QM.
That's good. That's a good answer, because I'll tell you, the asset depletion area is something that pretty much every non-QM lender offers. There's little nuances again to, do you abide by this? Can you do it with, can you add it to other income sources? How does this work, that work? And that's where you've got to learn each program for your favorite non-QM lender. But that's an area that real estate agents don't realize. And why I bring that up specifically is because with interest rates going up, house prices going up, you have a lot of borrowers out there who want to buy this house and end up getting qualified for this house. And when you can add in the asset depletion income, they can now qualify for this house. And I'm not talking about taking on huge levels of risk, and you hear subprime loans for those of you that were in it before. These are good borrowers, and they have a fair amount of money, and they can afford it, and that's what they want. And that's how a real estate agent can lock up and get a buyer approved for a house that the other loan officer or the other real estate agent couldn't do. That's just one example. We have bridge loan programs at LendSure. Bridge loan programs are a fantastic program. And it's something that is, in this market today, is very valuable to be able to turn in that buyer into a non-contingent offer. That's something real estate agents want to hear about. So there's a number of different things that you can do that if you begin to understand what non-QM really can offer, that's something that's going to benefit you.
That's it. John, what would you do tomorrow morning to go find non-QM borrowers?
See, this is where I know what I don't know.
It's got to be a short answer.
I know what I don't know. No, you guys are the experts here. All I can do is I can tell you what some of our top clients are doing. Okay, you are the experts here. Okay, I've been on the wholesale side of the business most of my life. I spent a little time originating when I first got into the business a long time ago when I had hair. But now I spent most of my life in the wholesale business. So you're really the experts here. So you have to figure out what's comfortable for you. Everybody's different. We have people that can succeed at a really high level using social media. Right? So if you go back to what I was saying before, the first step into non-QM is using it for a fallout. Not turning those borrowers away and saying, yes, I want to help you, and I have a solution, and I'm willing to take it. I'm willing to be not your sister. There's a solution to this problem, and I'm going to help you. That's the first step. The second step is once you get comfortable, once you become more of an expert, then you start talking to your referral sources about it. So whether or not it's social media, whether or not it's SEO, whether or not it's buying leads, there's all sorts of ways to do this. But I will tell you, Todd's right. Realtors are an incredible source for just regular referral business, But some of you may not know this, but they are one of the largest cohorts of bank statement borrowers in the country.
Correct.
These are not only referral sources for you. If you're an expert and you show yourself as an expert, they are also potential borrowers for you. And what better referral source can you get than someone you helped save a transaction for and close their loan? These borrowers, not just the realtors, they all love you. All of these borrowers love you because most of these people couldn't get a regular loan, and you solved their problem.
So with that said, you guys, realtors are the #1 vocation out of all bank statement loans ever done in America today, right now. The #1 vocation is that of a real estate agent. Now, my theory on that is they were the first to be introduced to bank statement loans. So that's why they grabbed a hold of them. So I take a different approach than John. I say, get the hell out of your comfort zone and don't do what's comfortable for you guys. Get out of your comfort zone and start going to the bank. I mean that. So here's what I would do if I waking up tomorrow and go find some non-QM borrowers. I'd go get public data is extremely cheap. And I can get a list of everybody who has a tax lien. Now, why would I do that? Well, people that have pretty big tax liens, normally they were self-employed, maybe had an S corporation, they didn't realize that income, plowed it back into their company, and were not able to take it out, and now they have a tax lien. But now, right now, answer this question. Home equity, it's at its all-time, okay? What does the IRS charge if you have a lien? What does the IRS charge you? 12.5%, right? What are these loans? 7 to 8, maybe 8.5. And oh, by the way, these loans are tax deductible. Why not do a bank statement loan for some person, self-employed, that swang at the plate and had a mess maybe, has a tax lien, let him pull equity out of his property, pay off the IRS, and put it into a tax deductible interest rate, half of what they're currently paying. It's waiting for you. Now, that little nugget, some of you guys might actually execute on. Most of you won't. Now, how do you find a self-employed borrower? You're going to trip over them walking out of your front door. What's your favorite restaurant? If it's not a chain, tell the person that owns it, hey, who's the owner? Hey, I come here all the time, really like this restaurant. Are you living in your dream home? Oh, you're not? Why not? Let's talk about it. Maybe you're a dry cleaner. You're a mechanic. You guys, there's self-employed people everywhere. Everywhere.
40% is the last percent I heard of the people out there are self-employed. I think that's a big number, and that market's been ignored, mostly.
That's it. Okay, so the biggest thing holding back LOs from closing non-QM loans is a question that we have here, and I think it's education. Todd, what would you say it is?
It is education, and so the next question is, how do we get educated, right? You're listening to us now, but you're thinking, okay, we were just kind of touching on the surface of things. There's two things I would tell you. Most non-QM lenders have a website that has training videos on it, whether it's webinars or just training videos. Go to any non-QM lender's website and you can somewhat self-train yourself. But then secondly, I would ask you to contact one of us, one of your account executives, region manager, have them come into your office and do a presentation. And I promise you, my account executives would be thrilled, as would any non-QM. John's would as well. They want to go in, they love talking to loan officers, training you up, making sure you understand. They don't want to leave until you understand how to find those loans and how to get the loans submitted. So those are the two things I would focus on.
Yeah, I would just add to that. This is where it's really important, and we say this all the time. It's very important who you choose to do business with, especially in this space. There's been a lot of ups and downs in the non-QM space really since COVID. We've had a couple big major market moves where lenders have come in and they've come out. Some of you have probably experienced this if you work for an independent mortgage bank. You had a product in-house, you didn't have a product in-house, now you have a product in-house. It's kind of come back and forth. It's very, very important that you're doing business with somebody that's focusing on this for a living. Because what we're able to do up here, because this is what all we do, is we are able to help you with the nuance. And again, I come back to this. Everybody's got the same basic set of guidelines. But it's when it comes out of the guidelines, 30 to 40% of our business, just like it is with Angel Oak and others, is exception-based. These are loans that are outside of our guidelines. Well, if you're doing business with somebody that's mainly doing conventional loans, they're not going to understand how to get that nuanced deal closed for you, and you're putting your relationship at risk. And you know, some of you maybe have experienced it, maybe some of you haven't, but I can guarantee you that if you work for an independent mortgage bank like your sister, and she's trying to do this in-house, they're turning away loans that we can do. And that's where you have risk. So don't ever walk away until you establish a relationship. Find somebody. There's a relatively small group of people that are focusing on this. Beyond this group, there's a relatively small group. Find one of them, okay, and develop that relationship so that they can help you become the expert.
And maybe jumping in real quick, just on my sister now. I have to tell you one last thing on my sister. She has closed 4 non-QM loans in the last 18 months. So I finally made a believer of her, but she was difficult. And I'm here to tell you she was difficult. And so there's nobody in this room, if my sister can do it as difficult as she was with me initially, I promise you, all of you in this room can do it.
Love that. Okay, we're going to get to questions in just a second, you guys. So there's no DU, no LP, there's no automated underwriting decisions for this stuff. How do you guys go about underwriting these wacky loans?
Take that, John?
I don't. There's somebody that does it. There's a couple things. One is that a good account exec, I hate to keep coming back to this, but it's super important in this space. A good account executive can help you through this process. So most of these loans are pre-vetted in some way before they hit the door. Okay, so it's rare that most non-QM companies just allow loans to get submitted without the account exec taking a look at it before it comes in. You're just setting yourself up for failure in a lot of different ways. Okay, so it's really, really important. Make sure you're dealing with an account exec that can help you through that process. They look at your credit, they look at the bank statements, they figure out your income, they take a look, basic look at your file, and it sets you up for success. I guarantee you, if you're working with somebody that's doing mostly conventional business, they do not know how to do this. Okay? Find a local account exec and have them help you through the process. Now, once you've done that, then it really is just like brokering a regular transaction. There's not much difference to it. And it goes through the same process. You underwrite, you get conditions, you stip, you close. It's all the same. And don't be afraid. Like Eric said, the water's warm. Come on in.
Todd?
In the manual underwrites, I want to make sure you guys got that. There's no DU engine for non-QM. Some companies might have an automated engine that they built internally, and they kind of punch some of that stuff through. But the majority of it is a manual underwrite with whether it's bank statements, whether it's calculating the DSCR, whether it's doing that asset depletion we talked about. All of that type of stuff is manually done. And most companies, used to be it would take a long time to get through. Most companies are getting back to you within 48 hours, 2 days. So it's a fairly quick process. I would tell you that service is important, especially on purchases. You can't be told yes. Somebody goes into contract and then 10 days later you find out the answer is really no. So you've got to make sure that you're working with a company that knows what they're doing. We've kind of harped on that a little bit up here, but I would just say it again. But it's easier to do that today because it is a manual underwrite where somebody's looking at the file and it's not going to get some approval that just doesn't fit later on.
So with that, you guys, there's no way you could possibly equate and bake into guidelines all that is of the human element out there. So these loan scenarios come in at you loan officers out there, and you're like, what? I can't even make this up. I can't believe how complex this borrower's loan situation is. The 3 of our companies, what we do is give us the scenario and we will structure the loan for you. At Angel Oak, we'll give you a full income and credit underwrite right up front before disclosures on a bank statement loan. Why? So you and your borrower and your realtor referral partner know exactly the purchasing power that that buyer has. So to go out there and start shopping for a house, and here's my income and credit is tight. This is what we do, you guys. Again, no automated underwriting engines. We put on common sense goggles. We look at the loan from a 40,000-foot level and go, okay, here's what we're going to do. Oh, this is off our guidelines, but I like this compensating factor. Gentlemen, what kind of compensating factors do we love?
Time on the job, how long they've been in the house. There's lots of different things you look at. If it's a new job, sometimes we see, at LendSure, one of our bigger loans that we've been doing the last year or two is self-employed under 2 years. Now, for some of you guys, you're thinking, what? You do self-employed under 2 years? Well, let me give you one example of one we did that to me was just a no-brainer, but to the loan officer, they just thought they were dead in the water. It was a surgeon, orthopedic surgeon to be exact, W-2 employee at the hospital for 4 years, and then all of a sudden became a partner. They made more money as a partner. They even had a letter from the hospital showing what the other partners were making, but they'd only been a partner for 6 months. This guy's now making so much money he wanted to buy a much bigger house in Los Angeles. And sure enough, he got a turn down. Ended up coming to us and we were able to do the loan. So
loan size, what was it? Loan size?
$3.5 million.
Oh, did you hear that,
Price,
folks?
$3.5 million.
Who were paid on basis points? John, what kind of compensating factors do we love?
Yeah, really no different than what you're used to. You guys have all looked at, I don't know, just looking out in the crowd. I think they did a survey, nobody under 30 or something like that. You guys have all been doing this a long time. You know what these are. You're just not used to seeing it in DU, right? You punch in your numbers and it yes or no and you move on. But it's the basics. It's assets. One of the things, one of the pet peeves I think of most lenders is we always get 1003, initial 1003s and registrations with zero assets. They just don't fill it in. I don't understand that. Tell us how much money they have. It's super important. And it'll help you get deals done. The more assets they have, the better chance you're going to get an exception. Time on job, massively important. Good credit, obviously, all that makes sense. But really, again, you would be surprised at the deals that are getting done. That's the thing that you have to stay open. You have to stay open to what's possible in the non-QM space. We don't do everything. We're doing loans that make sense. Okay? All of these loans, we haven't talked about it today, but they're all paying. All of these borrowers are paying at a rate like agency loans. So the work that we're doing is solving problems for you, but just keep your mind open to what's possible. Because like I said, we're getting deals done. There's sometimes the deals get done at Newfi, and I'm like, wow, that's pretty cool. Matter of fact, I just learned one today. Scott Griffin, before I walked up here, he's like, hey, do you know you have a move-up program? I'm like, wow, what are you talking about? I've never heard of a move-up program. And he told me about a solution where it's kind of like a bridge loan, but we're not going to hit you for the DTI on the departing residence. There's multiple ways that we can avoid hitting you for PITI on the departing residence, helping solve problems. That's what we're here to do, and just stay open to that.
Because of a lack of inventory, think about that. They got to move quick. They haven't sold their departing residence yet. Bam, you guys. There's all sorts of ways to get these loans done. You guys paid your clients into their dream home and making your referral partners look like champions. A compensating factor we love is, here's somebody that's carried a $2.5 million loan before and now wants to have a $3.5 million loan. Well, look at, they have the chops that they were never late on a big loan in the past. Well, how about the borrower that's got a $4 million tied up in stocks and wants a $2 million loan? Guess what? That borrower can just stroke a check and make this loan go away. Why wouldn't we do that? But everybody tells them no. Now, here's what we're paranoid about, okay? Here's our pain point. In this lane, every borrower that we close a loan for has a 3-year statute of limitation to sue us for their inability to repay the loan we underwrote, if it's their primary or their secondary residence. So we're on the hook for 3 years for doing a loan for a borrower. Or maybe an underwriter came to work hungover on a Friday, and here's a tax refund check she counted as income, and we funded that loan. And had we not used that income, the back-end debt-to-income ratio might have been 68%. That borrower can go get an attorney and sue Angel Oak for their inability to repay that loan. If we do that loan in Colorado, Minnesota, or Oklahoma, even making an honest mistake, it's automatic lien forgiveness. Wow. Imagine, we do a $2 million loan for you, and we make an underwriting mistake. And think about this. That's our pain point. So when it comes down to us underwriting these files, we're smart about it. We're looking at it going, hey, here's compensating factors. This borrower does have the chops to repay the loan. So with that said, John, we're going to start with you. Top 3 things about non-QM lending, nuggets that they need to know about. Top 3. No, we're going to go Todd first.
My God, yeah.
Look at that. Come to me.
I've already said my top 3.
Well, so one thing I tell you is it's not subprime. So I need all of you guys to think that. The average, we didn't really talk about this, but it would probably surprise most of you in this room to recognize that the average LTV in a non-QM loan is under 70%. The average FICO is north of 700, north of 720, for us. I'm assuming very similar for these two guys. And that's pretty spectacular. You're thinking, well, why are those loans coming to you guys then? Well, most of the loans that come to non-QM for us are usually income-related issues, where we're adding that asset depletion I talked about, or not counting the DTI when we do a bridge loan, or all those different types of things. Bank statement loans didn't qualify with tax return, but now it does with bank statements. It's income-related. It's not a bad property, or it's not bad credit, or all those other things. It's income-related. So just know that we're talking about rock-solid borrowers coming to us, and those are the same borrowers that you're working with day in and day out right now. So, that's number 1. Number 2, I guess, you ready, John?
No, you're doing great.
You're redundant. No, emphasize the point.
I can't even think of one right now.
I can. Guess what? Chase, Wells Fargo, B of A, they can't do these loans. They're not allowed. Think about that. Anybody here ever worked at a money center bank? You have friends that are still there saying no to self-employed borrowers who are able to show the IRS they have $36,000 a year in annual income, but want to turn around and buy a $2 million house? Come to us. Is this not a great country or what?
So the second thing I was going to say is broker. I go back to my sister's story there, but don't be afraid to broker. I won't keep belaboring that point, but I know that there's some sitting in this room right now who are thinking, I don't really like brokering. I don't want a broker. I didn't have a good experience. All those. I know somebody out there is thinking it, more than one. And so I'm just here to tell you, give it a try. You're going to find that the process with the people who survived and have gotten to where we're at, the 3 companies on the stage right here, they know what they're doing. So I'm here to tell you that we're ready to take those loans on, and we'll make it a smooth process for you.
So one other thing that I would say is that, so how many of you have not closed a non, there's no judgment here. How many of you have not closed a non-QM loan in the last 12 months? How many of you do not consider yourself an expert in non-QM?
How many are sick of raising their hand?
Okay. So the other thing that's important is look around the room. If you're uncomfortable here, there are so many really good loan officers that are sitting right next to you that know non-QM. We've got a couple in the audience that are great clients and good friends, and they know non-QM. So don't be afraid to reach out. One of the things that's great about camp is we're all here to help each other. We're all here to help each other kind of make that next step. It's one of the things I love about camp. All of your local chapters, you get an opportunity to sit with people in your own community and share experiences. Make sure you're talking about sharing those experiences and what are you struggling with in non? Why have you not been able to make that transition? Go find somebody that's actually made it and have them help you.
That's it, John. So we're going to be wrapping up. We have 5 minutes, and I wanted to make sure we got into some Q&A. But real quick, an announcement, everybody, the gala is going to start around 6:30-ish. So everybody go get into your stylish clothes, and we're going to have a great time later. So one last takeaway. Scott Griffin's here, and I'm going to plug Scott because he came up with something that I love. What we do, you guys, is we find ways of saying yes. Think about that. Finding a way to say yes on a loan is what we do, and it all starts with a scenario. Come to us with the weirdest scenarios that you have. What we are experts at doing is structuring loans. Maybe you haven't baked the 1003 yet, you haven't run credit, but you're like, geez, I'm wondering if Todd would entertain this loan, or John or Eric. Contact us, and a big broker check into your personal checking account always started with a loan scenario. So with that said, Constance, you had a question earlier?
So I would say one of the things that when I talk to people about non-QM, they always say it takes too long. Those take a lot longer. First of all, you gotta set realistic expectations, but I suppose the bank statement loan in 12 days.
12 days, close the bank statement loan. So these are not loans that take any longer than any other loan. And with us, I think all three of us, if the loan's taking over 15 days, we're pretty much so waiting on you and your borrowers for conditions in current market.
And the other thing I would say is, go talk to CPAs. They don't want their clients to be told not to write things off. So the one that we did in 12 days, the agent had actually referred the client to somebody else, and she told, the loan officer said, stop doing write-offs and come back in 2 years. So, I mean, she just.
That's it, CPAs. What better referral? Who, do you guys know, who has a database of self-employed clients that are currently renting, but their businesses are doing really well right now? Who has that database? Your CPAs. Everybody in this room, if you don't do your own taxes and you have an accountant, educate your accountant first. Lead with ATR, the ability to repay, because they're still shell-shocked over the financial meltdown on those stated income loans. This is not stated income. They're ATR, ability to repay, compliant. Then ask your accountant, hey, what clients do you know that are doing well? You're doing a great job writing everything off that may want to buy a house. So we're the only country in the world that allows you to write off the interest rate on your mortgage. Can't do it in Canada, can't do it in Mexico, can't do it in China, can't do it in Australia, not even Germany. And what is an accountant's favorite deduction for their clients? It's the mortgage tax deduction, folks. Connecting these dots. There was another question in the back. I saw somebody raising their hand earlier. Yes, ma'am?
No, you're good.
You're up.
You're good.
Yes.
Is there any limitations to first-time home buyers on these DSCR programs or anything of that nature?
Great question. First-time home buyer wanting to buy an investment property without showing any income. You guys allow first-time home buyers on that program?
Go ahead.
We do allow first-time home buyers. What we don't allow is, well, what is an exception, maybe is a better way of putting it, is if they're a renter and they want to do a DSCR loan and purchase that way before they own their own home. So when you say first-time home buyer, I want to make sure we're talking about a couple of different things, but we do first-time home buyers, first-time renters, a little different.
Yeah, the challenge is always occupancy fraud. That's the greatest challenge for a DSCR loan for somebody that doesn't own property. So if you can overcome that hurdle by telling a story, this is again, all these loans that we do are story loans. If you can overcome that hurdle by explaining the situation and why it's not going to be an owner-occupied, or why they're not going to move into it and they're going to continue renting, then we absolutely are open to that exception. But it's a challenge. It's a big challenge for obvious reasons, because if they're renting.
Is there like a distance that you're looking for?
Yeah, so even the distance is challenging, because remember, we're not looking at their job, we're not looking at their what they do for a living, so we have no idea whether or not they can move or do it remote, or
Everybody can work remote.
It's a really challenging situation. The one that we see most often is people that own other rentals that are renting now. They own other rental property, and they're gonna buy another property that looks like the one they're renting. That one's an easy one.
Yeah, or renting an apartment but needing a 1031 exchange. We know if they're gonna move in, make it owner occupied, they just shot themselves in the foot on their 1031 exchange. So a lot of exceptions to that. Young lady, you had a question?
Yes, you guys haven't said anything about ITIN loans.
Oh, I-10 loans. Anybody here ever done an I-10 loan? Oh, look at this. Everybody's hand has really gotten strong. Yeah, we do I-10 loans, yes.
Yeah.
All three of our companies do.
Yeah.
Yes.
Yep.
Yes, full doc.
We'll do it bank
And
statements
banks,
as well.
yeah, and bank statements.
12 or 24?
Either.
12 or 24 months, she was asking?
We have other programs that require less, but yeah, the 12 or, our normal bank statement program would be eligible.
Question over here?
We go to 75.
Okay, so on the down payment on the DSCR, is it 20 or is it 25?
It can be 20, 80% LTV.
Regular, not an I-10.
The other thing too that I'm noticing, which is a full transparency, I have a loan with Newfi right now.
Thank
And
you.
I appreciate it. You guys are at 80% cash out.
And his last name's Wise.
Yeah. Bankruptcy after just over 3 years, obviously agency wouldn't take it, general wouldn't take it. You guys did an exception for me. So the nice thing is that you guys are able to, as a group, look at exceptions and do things like that for borrowers who are able to make their payments, but they just don't fit in like the box.
That's right.
That's our specialty.
Yeah.
Scott, question? We'll go.
No.
No, our max is 75.
75 as well.
LendSure, what's your max?
75.
Uh-oh. Scott?
Yeah, I just want to say I love the current environment. And I love that you guys are focusing on the word yes differently. You know what I love? It's really challenging to compete in the paper world every day, especially in California where jumbo's so prominent. And if I go to a depository, I lost my sexy really quickly as a broker. However, when I live in the Alt-A space, or the non-QM world as we call it today, I live in a different version of yes. And I've learned when I communicate this out loud, I'm heard differently, and I get the chance to educate and be seen as that leader. What I love about the three of all of you is that each of you have your own shade of color of your yes.
Right.
It is so valuable in today's environment to have more than one partner in the industry. And it's so fun out there because we're California. And California is the land of the entrepreneur. The earthquake's coming and we're here anyway. This is a different spirit. And this is Southern California, it's Northern California. And it's doing loans through you. And I really love what you're up to. Thank you for inspiring industry. And thank you for inspiring all of us today to believe differently. It really works. I don't know what you'd be scared about. The word yes is a lovely feeling to swim in. And you guys are really great at unlocking it. So I just really honor
Thank
you.
you, Scott. You're moderating.
This is what I'm talking about. This is a full embrace of non-agency, non-QM. And you can, and like I would encourage you to talk to Scott about his business and what he's seeing today. I walk into a lot of offices where we're trying to pitch non-QM. I'll tell you a quick story. We walked into an office, empty. 2 people there, empty office. I walked in, hey, this is John so-and-so from Newfi. It's great to see you. How's business? He said, we're closed. We're shutting down. And I said, oh my God, I'm so sorry. He goes, I'm just kidding. We just have no loans. Okay, so there's one environment, right? The next day, we had a presentation with a real estate with a broker. They brought in all of their loan officers, and we had a lunch. And we talked about non-QM. The environment was invigorating. They were all excited and happy to see each other, and really just wanting to learn. And you want to put yourself in that environment. So when I say go find a friend, if you're working from home and you're doing this by yourself, go find somebody, have coffee, talk about it. And that's where you find this passion. The yeses help, I know, but that's where this passion comes from, is you're able to solve these problems when other people aren't. And thank you for mentioning that, Scott.
So with that, I want to thank Todd and John for their expertise up here. And with that said, we'll see everybody at the gala.
Yay.